Okay, we'll get started. We've got 14 people in here now. That's good enough for me. So if you see me take a pause, this is a start of the month webinar. So for anyone that doesn't know, I always share the first one of the month for free in the Telegram. That way everyone can start off the month. At least they can stay informed and have a pretty decent insight into what's going on. So for the free guys who aren't in the Discord, welcome, welcome. And for the Discord guys, welcome. It's good to see you all again. So this week we will go into as what we do normally. We'll have a look at some of the interest rates. We'll have a look at some of the um, projections or probabilities. We'll have a look at top setups. We'll have a little discussion about the economics. We'll have a look at some technical setups. And yeah, all good. At least it wasn't Pornhub. Ian, yeah, I've not made that mistake yet. Hopefully it never will happen. Anyway. Let's get started. So let's just have a quick look at data, and then we can use that data to lead into some economics, and we can lead that economics into some trade ideas. Um, so there's not really much of a change. The only thing that not threw me off, I'm not going to say that word, but what threw a spanner in the works for me a little bit was the Bank of Japan rate decision that we had. That came out very dovish, and it's now expected they're not going to hike rates for the rest of the year. So not expecting any cuts. I mean, we do have a 10% probability here of a cut, but I just don't see that happening. I think we are just going to have a continuous hold from the Bank of Japan, if that's the case. Um, Someone's requesting AI companion. I've never seen that before. I'm not going to allow it. I'm sorry, but I just don't know what it is. So I'm not going to let that come in this time, maybe next time. So Bank of Japan expected to continue to hold, which really throws a spanner in the works for my yen long idea. But that's by the by. At least I'm not heavily exposed on the yen, so it's really no problem. The RBA expected to cut. Reserve Bank of New Zealand's cutting. The Swiss National Bank is cutting. It's still expected they will go into negative rates at some point this year. Now, just a disclaimer, everything you see on this screen is built from a model. This isn't a set in stone thing. So just because you see the S&P projected or expected to go into negative rates, it doesn't mean that will 100% happen. The way that this type of thing works is it will take into account inflation, it will take into account the labor market, it will take into account in certain situations the tone and sentiment, and then it will come up with essentially the best guess. So that's what this is. Again, please don't print screen this thinking this is a holy grail or this is definitely going to happen. The Bank of Canada remains pretty stable here with a pretty much a 50-50 probability on on holding and cutting. Bank of England's expected to cut, cautious cutting from the Bank of England, though we'll get into that shortly. The ECB also cutting, and the Fed is expected to hold their rates. So top setups for this week, or at least at the moment, which is really nice to see. We do have the US markets projected or expected to be quite good long positions. I mean, we've seen great pullbacks on those at the moment. So the Dow's had a really good time. The NASDAQ's had a great time. The S&P's had a great time. So I am looking to buy all three of those along with the Footsie. I think the Footsie is a great choice to go long as well. So again, we'll go into those right now. Let me just quickly check my notes, make sure I'm not missing anything before we move on too far. Just before we do go on too far, there was something I wanted to explain, and I don't think I've ever actually explained it at all, ever actually. And it's what we call real rates. So we should, if you're a trader, you should know what interest rates are. But just if you don't, very quickly, an interest rate is basically what you pay, or essentially what you pay. So if you have a mortgage, you'll be paying interest. So the interest rate, obviously, if you're in England, you'll be paying the Bank of England's interest rate. If you're in America, you'll be paying the Federal Reserve interest rate. And that's what interest rates are. It's to help counter it or help battle inflation and keep the economy in shape, essentially, in a nutshell. So interest rates, let's just say we've got this here. So in Japan, or the Bank of Japan interest rates are at 0.5%. Now, them hiking is great, but they are holding. Now, the reason that this is bad, or I'm not going to say bad, the reason it's not great for going long on the yen is because of inflation. Now, their inflation rate is at 3.6. Please ignore my horrible writing here. It's quite hard to write with a mouse. Now, this will give us two different things. Obviously, we've got the interest rate and we've got the inflation. But this calculation, if we essentially add these together, we get what we call the real rate. Now, this is what is actually a big key player in deciding whether to take a trade or not, or if a currency is worth buying or selling. So this real rate, because if we take the interest rate of 0.5 and we take it away, sorry, if we take the inflation sorry, I'm getting words mixed up. Take the interest rate, take away the inflation. That is what gives us the real rate. So the real rate of Japan is negative 3.1. So it's not attractive. We're not actually earning anything because the interest rate, what we would be getting paid to hold the yen, is getting taken away from inflation, if that makes sense. So inflation is just eating away at whatever we would earn and more, giving us this negative 3.1% real rate. So hopefully, again, that wasn't a huge tutorial or anything, but hopefully that made sense to most of you. And that's why the yen isn't an ideal pick right now, especially with the Bank of Japan holding, because if they were hiking, those real rates would have been coming back to closer to zero, and they're not. So that's a bit of a negative thing. So for open trades, just a quick update. Swiss yen, this was a position trade I called in the Discord. Now, again, based on the Bank of Japan tone, I think I'm probably going to cut this one for a small loss. Obviously, we're taking this one on a long-term time frame. So I was taking this on the weekly, monthly time frames, expecting to have a slow dribble down over the next 1 to 2 years, which still could happen. But again, just going back to what we've already had from the Bank of Japan, I don't really see any value in holding it right now. I'd rather cut this for a very small loss and possibly reposition later in the year at a higher price, and then we could, yeah, look to reposition then. Euro dollar, we did take a euro dollar position to the long side, expecting the US dollar to continue its decline. I was looking to see this huge level here between 99 and 100 get broken to the downside, which hasn't happened yet. I am still relatively bullish on the dollar crosses. We'll move on to the dollar specifically shortly. The only problem I see really with the euros is not supported by very much. There's massive, massive hope in Europe around an aggressive fiscal stimulus. So that is very supportive of the euro. But fundamentally, it's not really worth what it is right now. It's pretty overvalued in my view. But you can have these opinions. You know, I could sit here and say I think euro dollar is overvalued. I don't have the money to change the value. You know, I can't do that. So if the market's up and it's moving up, it doesn't matter if I think it's overvalued. I have to buy it because if I sell it, I'm going against the market. You know, it doesn't make sense. So there is that aspect. Euro pound, we called this one as well, or I called this one. Moving fine so far. We'll be moving stops to break even this week if we can see a push above these highs. Very simple trade, just a 1 to 2, nothing too extraordinary about that one. The Aussie Swiss, I'm not going to speak on this one because it wasn't my trade. It was one of the other guys at Tully Traders. Similar thing for copper. So if you want updates on those, we've got them in the Discord, of course. So moving on into the watch list, what do we want to take this week? Well, silver and gold seem interesting. The main factors, as far as I'm concerned, the main factors for gold and silver are kind of done, or at least on pause. Obviously, we had the huge tariff problem. We saw the dollar sell off. We saw huge inflows into the yen and the Swiss and safe haven assets. So it was a no-brainer to buy gold and silver. Well, specifically gold. It was like, you know, you'd have been pretty dumb to have not at least tried to buy it. Now, because we've got the 90-day pause on tariffs, and I think that will come to an end in around June-ish. So until then, unless we get any major updates, I just don't really see much of a catalyst to get into gold in terms of a geopolitical situation. We do have central banks still buying. The sentiment around gold is still bullish, but it's just not as much. So you can see I am willing to take one long position here if we can see tonight actually open up relatively strong to the upside. If we can see the market either open higher and Monday behave reasonably, as long as we're not what I'm trying to say is as long as we're not starting to break to the downside below these current lows, and as long as this trend stays to the upside, I will be happy to buy it, just following the trend, continuing momentum. We can see the 200 moving average and the 50 moving average is still bullish. We've managed to hold at this support level that we previously saw. So from a technical standpoint, it makes sense. But again, I think some of the main drivers behind gold have calmed down, but I still think we could make some money buying it. Silver is tricky because silver is essentially the ugly little brother of gold. And I don't mean that because I don't like silver. I just mean that because it's so undervalued. Keep in mind, silver isn't just a precious metal. It's not just a safe haven like gold. It's also got the industrial aspect. So it's not just, oh, it's silver, let's just hoard silver in case of an apocalypse. It's silver is genuinely used in day-to-day life by a lot of people, industrial stuff, manufacturing. So to say it's sat around $32 and gold has had, what was it like 30, 40% rise in the past 2 years? Insane. Silver's just not seen it. So I would expect silver to continue to appreciate up until around 35 to $40 in the medium to long term. So in terms of in short term, I've got no real view. I would like to buy it. If we come down to these previous lows at around sort of 29 to 30, I'd be quite happy to take in a position trade really on silver, looking to hold for maybe a year or two. But yeah, no real short trade. Sorry, no real short-term trade just yet on silver, in my view. Nasdaq, as we said earlier, the U.S. markets are looking, from a data point of view, are looking very, very good to go long. So the Nasdaq specifically looks really good. The only slight problem I've got, and it's only very small, is this market gap. Some of them have been filled, some haven't. The one on NASDAQ here hasn't been filled, which to me is a little bit of a problem, a bit of a red flag, because these gaps do generally get filled. You can see it here got filled, it got filled up here. You can see it got filled here, and this one is left open. So I'm just a bit cautious, but I'm not going to let a small market gap ruin a potentially huge trade idea. So what I do see at the moment, again, we saw it on the Edge Finder slightly earlier. We do have the moving average cross, and that to me only indicates a short-term trend change. It's nothing else. But once we've had the cross, it tells me that there are buyers in the market. The trend has changed. We should also start looking to buy. We've broken above previous structure here. So I am looking to have this retest of this previous resistance, turn it into support, then continue higher back into the all-time highs of the NASDAQ. So a very simple game plan there. If we do see price come back down into this market gap, fine, I'll look to buy again. I'm not someone that will sit trying to short the US market specifically because, I mean, here's a little tip. If there are any new traders in this webinar, just look at the NASDAQ on a higher time frame. Why would you ever want to go in for sells? You would have made money here, and that's pretty much it. Unless you were scalping, of course, that's a different thing. But if you're a swing trader, day trader, very, very, very difficult to make money trying to short the US markets. So yeah, that's just a personal rule. I thought I'd give you a little bit of a tip there. Dollar yen shorts are still on play or in play for me. It seems like the dollar yen shorts are still got or still have got massive interest. I wouldn't say we're at record highs anymore, but if you want to call it a short squeeze, fine. I don't really like that term, that wording, but whatever. We have seen some upside, possibly taking out some of those shorters. So sells below 150, you can see, are still one of the targets. The technicals also look pretty solid here. So we are just at this fib level now. It's a little bit messy. We broke above, we pulled back, and now we've rejected again. But generally, we're staying within the 61.8 and the 0.5 level, staying below this 200 moving average. So technically, this is still a bear market to sell into. Now, as I said earlier, we'd go and look at the dollar. The dollar gives me the spooks. I'm not going to lie to you. So the reason is if we draw the fib from low to high, and keep in mind, this is the monthly time frame. These are big, big levels. So there'll be a lot of eyes looking at this. This isn't the 5-minute time frame that no one cares about. This is a major structure. So we've got price currently rejecting the fib level. We've got previous structure over here, now turned into support for multi-month periods. So it's going to take a lot of sellers to break this level. Now you can see buyers are fighting back, but who's going to win? I don't know. I would say that sellers are going to prevail in the medium to long term. So I would expect some sort of upside on the dollar temporarily before we start heading back down into sort of the 90 to 80 range. So anywhere in here. Now that's a big target. Again, we're looking on the monthly time frame. This isn't going to be an overnight thing, but it's a general direction that I am paying attention to. So I would be quite happy, as I said earlier, to me, euro dollar looks overvalued. So if we do see a pop to the upside on the dollar, then a continuation to the downside that might correct some of those dollar crosses to then allow us to start positioning long into the end of the year. The dollar just doesn't seem fundamentally great to me. I mean, they're not the fundamentals around the dollar, they're not awful. I'm not saying the dollar needs to completely crash off a cliff like it, pretty much has done. But it just doesn't look great. I mean, the dollar's already fallen. What's the 3 months of just bear activity? We've also got the Fed that's coming back into an easing cycle. So yeah, the landscape for dollar bulls is just not the best right now. And the reason I'm looking towards 90 is it's the next major psychological level from 100. And again, we've got major structure here. We've got previous support and also previous resistance. So that, in my view, would be the next big stopping point for dollar bears. So moving on, what do we have next? We have got the UK 100. Actually, just because, sorry, just while I'm thinking about it, we do have. Oh, let me just type. I struggle to multitask. I think that's a man problem. Uh, there you go. Sorry, just bear with me. Uh, why can I not? Uh, there we go. There we go. Okay. So the reason I sent a link is we've got our discount ending tomorrow. Once that discount ends, we are closing Elite Traders for the rest of May because we've had over 30 people join, which is a big deal because obviously we've got group chats, webinars and stuff. So I need to be able to focus on them rather than having to deal with new people constantly coming in. So if you want to join, now is the time. We've got huge discounts on. After that, we're done. Anyway, moving on. The Footsie looks very strong to continue to the upside. We do have, as we spoke about earlier, the Bank of England cutting interest rates, which is very beneficial for the Footsie. Now, I know that elite members will already be aware, but again, this is free, so I will just quickly explain why interest rate cuts are beneficial for equities or for the stock market. So, as we know, when a central bank cuts their, that's meant to be an arrow, but whatever. When a central bank cuts their interest rates, it's generally pretty negative for that currency. So we'll see the currency go down. Then in turn, we will see the stock market head to the upside. In this case, the Footsie. So we see the UK pound or the sterling come to the downside. We see the Footsie up, and this is where that common I'm going to call it a misconception. A lot of people say, "Oh, the S&P and the dollar are inverted, or they're inverse correlated, or whatever." They're not really. They just work opposite of interest rates. So to actually explain it, when you own a company, let's just say you own a big company in the UK, and you need to borrow some money to expand or to do something, you don't want high interest rates because that means, let's say you borrow £1 billion, you're going to have to pay back you have to pay back a hell of a lot of money just paying off that interest, not necessarily even just the loan itself. So when interest rates are lower, that means that companies can borrow money and pay back less. It's cheaper for them to expand and to do things. So when it's cheaper for them to do that, it increases optimism by investors. So hopefully that makes sense. And obviously it's the same thing for when they hike interest rates. That's why when we see the Fed hiking or the Bank of England hiking, we'd see the S&P or the Footsie go to the downside because it's the opposite theory, or not theory, it's the opposite thing. So hopefully that makes sense. So because we do have the Bank of England about to cut rates, that means we can expect the Footsie to continue higher. We do almost have this trend change. As I've spoken about, it's quite a nice signal that we've got this enough buyers in this market to change the trend. The RSI is slightly overbought, telling me that we could see this downside to retest this previous level of structure, which was previously support, act as a resistance, and yeah, very simple technical stuff there. So yeah, Footsie, in terms of targets on the Footsie, I would really advise it. If I can't say advise, I would really not look to target new all-time highs. And the reason is just because of the behavior of this market. And that's something you should always take into account is how does the market historically move? What's the behavior of it? And the Footsie's behavior is horrible. It's an ugly, disgusting, horrible market that I would actually rarely ever trade. I would only really take a trade in a situation like this where we've had a huge drop, huge opportunity. Day to day, this is a horrible market. It's very range bound. It's yeah, it's like a sound wave or a heartbeat, someone having a heart attack or something. Um, so just from that, it means I'm not looking to, it's not a trending market, is what I'm trying to say. So I'm not looking to try and trade this into all-time highs. I just want to see it at previous highs, and then I'll take profits, and I'll run away because I hate Footsie. Um, so yeah, there's your professional analysis on that one. The S&P, I think the S&P is also a really, really great idea. Very similar to the NASDAQ in terms of the setup. We'd be looking for this previous structure here, looking for the retest rejection, and then the retest of the previous support, which obviously we can see here, and then continue higher. The S&P is on the face value, I guess it can look quite intimidating, especially after this huge move to the downside. But when you zoom out and you take into account the amount of times something like this has happened, and it just recovers very quickly, very easily, no problem. And if you were very hesitant, you would have missed a lot of money, and you would have left a lot of money on the table, like this time, like here, like here, like here. So yeah, I really wouldn't overthink it too much. Obviously, I'm not saying you go full margin and just buy the S&P, but I'm very much in the mindset of buying the S&P on pullbacks as much as possible, and that's what I'm going to do here. If we do see this pullback into around 5,500, I'll buy, no questions asked. The Euro Swiss also, to me, looks great. Excuse me. So the euro, I said earlier it's overvalued. That was specific, or I was specifically talking about it being overvalued against the dollar. In terms of the euro itself in general, I think it's actually quite good, especially against the Swiss. And the reason is, as I said earlier, we've had a huge risk off sentiment in the market. And you can see on the Swiss index here that the Swiss and the yen actually showed the similar behavior, which had a huge move to the upside. It was very unforgiving for anyone trying to sell this market. And again, that's because we had a lot of fears around tariffs. Now that's been paused. We've also got some hopes between Europe and the US. We've also got hopes between China and the US. So that market optimism is now coming back in. We are very clearly now in a risk on market. So that means we can expect people to start selling off these positions that they bought while they were fearful, and start allocating capital into risk on assets like the S&P, like the Footsie, the NAS, and etc. So if we're looking for the Swiss to sell off, or not sell off, we're looking for the Swiss to depreciate in value. The euro could continue. The euro is technically risk on, even though it's risen during this period. And again, we do still have the euro relatively supported by hopes of fiscal stimulus. And yeah, that's pretty much it. We've still got outflows of the dollar as well, which is helping to support the euro. So yeah, euro Swiss long seems fine. Obviously, we've got the Swiss weakening. We've got the euro pretty stable. It's a pretty straightforward, no-brainer trade. Again, using the market behavior, it's very simple. I mean, actually, let me just extend this box so I can visualize it here. 1 second. Here. So this level is pretty respected throughout this market. I mean, you can see it bounces, 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 and is very range bound, like we saw in the Footsie. So if we're expecting more range bound behavior, where would you expect this market to go now? Just based on pattern recognition. Well, you'd expect it to range like this. So that's another thing on our side. Again, that's a very loose way to look at a trade, but it's something that you should take into account is how the market moves historically and typically. Euro dollar. Exactly the same as euro dollar. Would be quite happy to buy this market, but I just need to see it come down. It's way too high. I think it's very overvalued. It's very expensive for what it is. In terms of where to buy, I would consider buying here. I think this would be the first entry I would attempt to take. If we don't see that, the next opportunity I would have is the 50% pullback, which is more down here, actually, basically where our stop loss is. So if we got stopped out, it would essentially be a case of re-entering straight away. The price action is really, really ugly. I mean, because this is such strong left side traffic, it's actually pretty possible that we might even see the euro dollar and the pound dollar completely come back down to this low before continuing higher. Whether that will happen, I don't know. I can't tell the future. I can only trade what happens and what I know. So this remains the first entry opportunity as far as I'm concerned. Now, the US 30 is the final thing on the watch list, and this is actually the most optimistic trade. We've got, obviously, it's the top rating on the Edge Finder, so that's quite a nice little confluence for us. Excuse me. The same setup as we've been looking at previously on the NASDAQ and the S&P. We're looking for a rejection of this previous support, use it as resistance temporarily, possibly look for some sort of fib pullback here. Where exactly it would be, I'm not 100% sure. This looks a little bit too perfect. It lines up with this gap almost like weirdly perfectly. So I don't know. That kind of gives me a bad vibe. You know, when a trade looks too good, it's too perfect. They're generally the ones that actually rarely work out. So I think I'd draw the fib from here, which is slightly breaking my rules because I wouldn't really consider this the previous low. Um, but there's still the technical setup here still is pretty fine in my view. We've got here previous highs acting as resistance. We do have this low that failed to break below, so it again would be good enough for me to take an initial entry just to see if we can get a reaction. And as we've spoken about previously, we've got these moving averages that look like they're about to cross, indicating a trend change to the upside. So yeah, looks quite strong to me. I'm just going to show you, and again, for anyone that's in the free Telegram, you probably won't have seen this, or you might have seen it rarely. But I share this every day in the Discord. These are positions that real institutions, real banks are in. So if you're not in the Discord, please screenshot it so you have it. But we can see. I'm not going to go through each one because it would take too long, but we do have Danske Research in a dollar yen short. They got triggered in at 145. We've got euro dollar, euro dollar, euro dollar, sorry, euro dollar, AD. Oh, sorry, last thing. I completely forgot to mention this earlier. COT data is very interesting for the dollar. So, does anyone notice a pattern here? I'll give you a second just to think about or just to look at it. What do you notice about this COT history? Bearing in mind this goes back to this time this time in 2023. So it's not light. No one's answered yet, so I will go ahead and explain it. Well, this 50% is almost like a support. Well, what do we see? Well, every time that institutions start selling the dollar, it comes down to around 50% and then pulls back. It's almost like a trading chart. So, will institutions continue to sell off the dollar for the first time in what, 2 years, 3 years, and take it even lower? I'm not sure. This may be a case where institutions take it below that 50% line, saying that they are really bearish on the dollar. Then it pops to the upside and continues higher. I don't know. And if we go back and just reference the US dollar chart right here, it seems perfect. And again, it seems too perfect. Is this going to be one of those trades where it looks great and then actually just falls apart and the dollar continues to sink? I don't know. But with the fib, the structure, and historical COT behavior, this might be a great opportunity to buy the dollar. That's, in my case, not enough to say that I'm going to buy the dollar, but it's something to pay attention to. If we start seeing institutions buying up the dollar again, that might be a very early sign that you could be buying the dollar at a discount around $100, roughly. Okay, so next thing is retail positioning. Obviously, I know all of us are, well, at least I think all of us are retail. So let's just see what the majority of us are doing so we can counter trade them. So let's just look minor major currencies. Dollar Swiss, we have retail majority long, so you would want to sell. That makes a lot of sense. There's nothing overly interesting actually here. There's nothing that's piquing my interest. Okay. So, guys, I'm pretty much out of things to discuss now. That's kind of it. Actually, what I'll do is just leave that here. So I did put this in the Telegram and in the Discord, so you should have seen it, but feel free to look at that if you haven't. If you've got questions, please let me know. I can answer them right here, right now. If not, then you're probably not going to get it answered unless you are in the Discord. So trading seems pretty straightforward this week. I wouldn't say there's any huge shocks or huge surprises. The US data for NFP and unemployment came out relatively okay. Unemployment stayed the same at 4.2. NFP took a actually, let me just double check. I think NFP was pretty decent, wasn't it? Let me just refresh my memory. Hold on. I'm not one of those traders that just keeps all the information in his head. I can't do it. Last week. So what did NFP actually come out as? 177. Yeah, it was okay. We did see a revision in the previous release at 185, so it was a reduction. We did beat forecast, but again, it was worse than previous, so that's not great in my view. Average hourly earnings also took a hit, and unemployment stayed the same at 4.2. So yeah, definitely not the best data we could have had. But yeah, that's it is what it is. Darwin, you new? Good stuff. You would when you say you new, are you new to the Telegram or new to the Discord? Or new to trading? Hello, I'm curious what happened to AUD last Friday. There was huge strengthening on AUD. Let me check. I'm actually not sure. I've not really been involved with the AUD for a while. Uh, Friday it was here. I don't know. I wouldn't if this is what you're talking about. I wouldn't consider that huge strengthening. I mean, it's pretty much still within the range. Where's the doc you just showed on the currencies? Do you mean this or do you mean this? Which one? Oh, Darwin, you knew. Okay, Discord, fair enough. Both. Okay, well, this is the Edge Finder. This is a paid for software. This is free. This is sent to the Discord and to the Telegram. So if you want this, you would go to the channel that says Elite Research, and the link is put in there every week. Okay, so let me just have a very quick think and make sure I'm not going to forget any. I'm not forgetting anything to quickly discuss with you. Let's just have a quick look at currency strengths. We do have the US dollar. Oh no, sorry, the Swiss, not Swiss, the Swiss outperforming heavily over on a monthly basis here. US dollars underperformed massively. That's really no surprise. Australian dollars also being hit very heavily. Now, if you're relatively experienced with trading, you will see exactly what's going on here. Very, very typical, very clear risk off sentiment. Dollar sold off, Australian dollar sold off, pound didn't do very well, CAD didn't do very well, but Swiss and yen did completely fine. But we can see the complete opposite here on the daily. So we can see the Australian dollar did quite well, New Zealand dollar did quite well. So very good indication that the risk sentiment has changed now from risk off to risk on. Yes, Darwin, I'll be doing even more daily shows when I leave the UK because I'll be on my own. At the moment, I'm with my partner, but yeah, I'll be on my own in Indonesia, so it'll give me a lot more time to be able to stream and do content and things. So, guys, that's it from me. Again, if you've got any final questions, let me know. If not, I'm going to end the stream here or end the webinar here, and I will see you all very soon. Again, just to remind anyone that wasn't here earlier. Biggest discount we've ever done right there. So if you want to join, please do. We will be closing the Discord after tomorrow. So no more people can join and the price will be increasing back to $100 a month. So this is your very, very last opportunity. Yeah, no problem, guys. I'm glad you found it useful. Yeah, enjoy your weeks. I hope you all make a lot of money. Guys, enjoy your weeks. I hope you all had a good weekend as well. We'll speak very, very soon. And thank you all for joining.